Happy New Year, everyone. It is 2025, and it has never been more difficult to find an undervalued stock. That's because the market, by many measures, is looking more and more overvalued every day. Here's a chart that plots the 10-year average of the S&P 500 forward PE and the current 12-month forward PE of the S&P 500. As we can see, it was quite overvalued in 2000. We know what happened then, and it's getting back to those levels today. Now, a lot of people ask, should I not be investing then if the market is at record high forward PE levels, which is price to earnings? And some people say, well, maybe I should just pull my money out of the markets and hold it in cash. I don't think that's necessarily the best idea. For one, just because the market is overvalued doesn't mean it can't stay overvalued for quite some time. And it also doesn't mean that fundamentals can't catch up to this overvaluation. However, the wonderful thing about being an investor in the stock market is that you don't have to buy, quote unquote, the market. So if you think the market is overvalued, maybe there are some individual stocks or individual securities of some kind out there that might not be overvalued. Not everything moves together. So today I'm going to talk about 5 stocks that I'm excited about for 2025, a few of which I believe might actually be undervalued in an overvalued market. So let's jump into the first stock on my list of potentially undervalued stocks for 2025, and that is TransMedics. If you've been following TransMedics Group stock ticker TMDX, you know that they have had quite a horrible 2024. It's funny because at one point the stock was up triple digits, so that means it more than doubled in the year before collapsing down after reporting a pretty disappointing earnings report. However, at what point does a poor earnings report become an overreaction by the market? From peak to current day on New Year's Eve, as I'm recording this, the stock dropped 66%. So in about 4 months, a 66% drop without any major catalyst besides a poor earnings report. So when I say a poor earnings report, what do I mean? Because revenues were still up 64% year over year. Well, the only reason it was a quote unquote poor earnings report is because the market was expecting it to be a lot better. A lot of times when stocks start growing very quickly, the market's expectations of them rise in tandem. So their third quarter revenue for 2024 was actually below expectations. It was about $6 million below expectations, and it was $5.5 million below what they reported in the previous quarter. Now, the thing that intrigues me about TransMedics stock is that expectations are low. And the reason you can tell that is, one, by looking at the stock chart to see that the stock price is low, but two, TransMedics just reported negative quarter-over-quarter revenue growth, right? So they had less revenue in the third quarter than they did in the second quarter. So I believe that this type of thing leaves investors' expectations very low. What TransMedics might possibly do in their next earnings report is grow revenues, right? So if their revenue comes in at greater than 109 million, well, that's already a step in the right direction because they're no longer showing negative quarter-over-quarter revenue growth. The other thing that I think could potentially happen is what's known as a relief rally. So when a stock is down, 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 and everybody's expecting the worst, and then bad news comes out, but it's not actually that bad, the stock might shoot up even on bad news. Yes, it is possible. I think the Motley Fool does a good job of explaining what's going on here. They say, this stock isn't falling because Wall Street thinks its business is in trouble. It's down because analysts now expect sales and earnings growth to be a little less thrilling than previously expected. Oh no, darn, a little less thrilling. How will we survive, right? I don't think this stock is dead. I think it's still quite an exciting growth story. TransMedics is known for their OCS program, or Organ Care System program. Essentially, the traditional way of performing organ transplant procedures is very old-fashioned. Typically, they'll put organs on ice and rush them to the recipient as quickly as possible, and TransMedics makes these nice little homes for organs that keeps them safe a lot more effectively than just a bag of ice. So it's a very interesting company. It's, in my opinion, it got a bit of a room to run, even though it is kind of a niche product. This is a small cap company. So they do say that there's riches and niches. I pronounce it niche, so that doesn't really work for me. But what I'm saying is that even though the potential total market for this product might be limited, the company is quite small. So it's not like expectations are terribly high anyway with a $2 billion market cap. So I will be watching TransMedics Group in 2025. And if I do decide to buy shares and go long TransMedics, I will post an update to all my YouTube members. If you're a YouTube member, you will get to see all the trades that I'm making. Okay, next up is a stock that maybe is not quite as undervalued, but I think might have a very good 2025, and that stock is Coherent Corp, ticker COHR. Now, when you look at Coherent's stock chart, it more than doubled in 2024. So you might think this stock isn't undervalued. Why would you be interested in this stock? Well, just because it doubled in 2024 doesn't necessarily make it overvalued today. Coherent's strong performance in 2024 is linked to strong financial performance as well. This was a company that was created by a merger. So there was a company called Coherent that sold lasers, and there was a company called 26 or IIVI, right, Roman numerals, that merged to create this sort of diversified semiconductor and hardware company known as Coherent today. So the company's revenues stagnated and even dropped in 2024, and that's because of a slowdown in some of Coherent's end markets like industrial automation and electric vehicles. We saw a big slowdown for that in this previous year. However, they're able to catch back up, and they are now posting nearly 30% year-over-year revenue growth, thanks in part to, you guessed it, AI. So we can see that Coherent's quarterly revenues have been growing. They have had no negative quarter-over-quarter revenue growth in the past 5 quarters. And if you're a software business, that's pretty easy to do. But Coherent is not a software business. They sell physical products. So that's actually quite impressive that they're continuing to grow while selling these physical products. So what does Coherent have to do with AI? Well, they offer photonics hardware. So photonics is simply the study of light, the control and manipulation of light. So things like lasers. It's very cool. If you're interested in this, definitely check it out. Coherent and other companies have found that their photonics products are actually vital to the AI revolution. Now, this is an old article. It's from 2023. However, it explains how the global photonics market is growing due to AI. And I believe that this is probably a paid article because they only talk about Poet Technologies, which is a small company. I'm not interested in Poet Technologies. I'm interested in Coherent, which actually makes a lot of revenue and even a slight profit this past quarter. Now, profitability is still an issue, but I think Coherent has a lot of runway to grow in photonics thanks to AI, as well as some of their other use cases in automation and manufacturing. So we go to Coherent's website, we can see that this is a very diversified company thanks to that merger. So they break up their business into these 4 categories: networking, and this is not necessarily data center networking as you might think of things like Broadcom and Arista networks. It's not necessarily that type of networking. This is more 5G networking, right? So communication, telecom. Lasers, which is so cool that you can invest in a company that makes lasers. 5-year-old me would be very excited about this. But this is those photonic solutions as well as optics. And then they have this materials division, which is a bit broad, but they have applications for SiC, which is silicon carbide semiconductors, and ion implantation, which can both see some growth through the adoption of EVs, right? Because electric vehicles use these silicon carbide chips more than any other technology, and these ion implantation devices, which is a crucial step in semiconductor manufacturing, are seeing a lot of use cases in automotive applications. So Coherent, I think, could have a great year in 2025. Why? Because photonics are used increasingly in AI, which is causing this nice boost in revenue growth, and some of their end markets may start to see a recovery in 2025. As we know, those markets have been quite weak, industrial automation and EVs, and if those turn around, all while AI continues to grow, I think Coherent could continue this double-digit revenue growth, and as they continue to grow, they're going to become more and more profitable, which is a problem for them right now. So if they reach profitability alongside 20% revenue growth, and they're trading at less than 3 times annualized sales, right? They have a $14.5 billion market cap, and they bring in about $6 billion of annual revenue, right? That's pretty low valuation on a price to sales basis. So I'm going to be closely watching Coherent. Of course, the stock, it has run up, so I'm a bit hesitant to buy near all-time highs. So if I do buy this one, it would be like any new position where I'd take a dollar cost average approach and buy it slowly over time so that I kind of avoid market timing. The worst thing is when you go all in on an exciting stock and then it drops like 20% and you're like, man, I should have waited, right? Dollar cost averaging kind of takes out that regret. So that's Coherent. Now let's talk about some less speculative and more established companies, starting with Qualcomm. Qualcomm is a large diversified semiconductor company. We can see a theme with semiconductors here. This has a $173 billion market cap, so this is no small fish in the pond. However, their year actually was a bit disappointing. They underperformed the broader market in 2024. So what happened? Well, Qualcomm has had a lot of threats to its business lately. Qualcomm's chips are primarily used in smartphones, and they have have a large partnership with Apple, which may be coming to an end. Qualcomm and Apple have been, I would say, butting heads lately. They don't necessarily get along. And they've also had a legal battle with ARM, the chip infrastructure company. So Qualcomm's chips use ARM's infrastructure, and Qualcomm acquired another company that also used ARM's infrastructure. So ARM was trying to get the company to pay for two different licenses, despite Qualcomm just being one company. Qualcomm said, that's not fair. We should only pay for one license because we're one company. And ARM said, well, you used to be two companies. And ultimately, ARM lost that legal battle. Qualcomm did win, and the stock was only up about 3%. So I think the market did expect Qualcomm to win, but that's one less risk that Qualcomm has going into 2025. They wrapped that up right before the year end. So another exciting thing about Qualcomm is that they are beginning to grow revenues again. We can see that revenue is up 19% year over year. Keep in mind they did make an acquisition that's going to help fuel that growth. However, it's not just top line revenue. Qualcomm is also quite profitable with a net profit margin of nearly 30%. That's astounding, and I really love companies that are highly profitable. Now, you would think a company that's growing with strong profit margins would be quite highly valued, but they're not. Their PE ratio is a lowly 17, and they also generate strong free cash flow, so their price to free cash flow is not too high either. And additionally, Qualcomm is doing a great job of diversifying into new markets. So no longer will they be primarily reliant on just smartphones, which is not an exciting technology in my opinion. The smartphone has been around for a while. I'm not really seeing much innovation in the smartphone market these days. What I am excited about is their diversification into the automotive market and into IoT, which is the Internet of Things. So they hosted this nice little diversification update last month where they talked about these two new businesses, and actually their automotive business alone is going to help them diversify very well. They're expecting very strong growth in that segment, which is actually very impressive because the broader market for automotive has been really slowing down, especially as interest rates are high. So Qualcomm, another one of those stocks where it didn't have the best 2024 when you look at stock performance. However, I think they have a lot of opportunities in 2025 with their diversification, with this ending legal battle with ARM, and with their low valuation. So I'm excited to see what Qualcomm accomplishes in 2025, and I am long Qualcomm stock. It's a very, very recent ad for me, so I'll be continuing to dollar cost average into this position. Next up, let's look at Adobe. Now, Adobe I've been watching very closely because, as you can see, they were actually down in 2024. So we had a 20% plus rally in the market, and Adobe is down 20%. So Adobe, huge opportunity cost and huge losses. So I think the market may be, again, overreacting, similar to TransMedics. We have to keep in mind that Adobe is a software company, and it's a very well-established software company. So software companies are known for strong gross margins, strong recurring revenues, and they tend to have higher valuations. What we see with Adobe is a valuation that's pretty in line with a PE of just 36 and price to annualized sales in the single digits. It's not unreasonable to see software companies have price to sales of 10, 15, 20, 25. I mean, shoot, if you're SoundHound or Palantir, maybe 100. I'm slightly kidding, but those are very expensive companies. Anyway, Adobe has quite a reasonable valuation, and it mostly stems from this recent earnings report where the stock dropped a cumulative 19%, which might not seem like a lot, but when you realize that this company is valued at $200 billion, 20% drop is quite significant. So what happened? Well, Adobe, according to Morningstar, reported a pretty good quarter. However, their outlook was a bit mixed. Now, Adobe is supposed to be a large beneficiary of AI, right? So Adobe is creative content creation software. So this is the type of thing that generative AI should have a huge impact on, right? And Adobe has their Firefly product for generative AI. They're also working on Gen AI music and video tools. So should be very, very exciting stuff going on at Adobe. However, they're just not seeing that revenue growth that is reaccelerating yet. The revenue isn't going down by any means. It's still growing. It's just not growing as fast as the market had expected. So I think that's leading to the sell-off, but I definitely think this sell-off is a bit overdone. Morningstar says that they're encouraged by recent product introductions throughout the portfolio, and they think Firefly leaves Adobe well-positioned in artificial intelligence. I tend to agree. I think with these low expectations, if they start to show a little bit of traction, the market will quickly turn around with their opinion on Adobe. Now, that's just my opinion. Of course, all of this that I'm talking about today is not a recommendation to go out and buy any stock. I'm a very big advocate of doing your own research when investing and investing in companies that make sense to you, not just because somebody else is buying them. So again, Adobe on my watch list with these record low valuations on a PE, price to sales, and price to free cash flow basis. I also think that they have a lot going for them in the AI space that is currently being underestimated by the market. Finally, we have my favorite little boring company, and that is Mondelez International. This is the company that owns Oreo and Cadbury, as well as other cookie, cracker, snack food businesses. Again, Mondelez had quite a horrible 2024, despite the underlying business still remaining quite strong. We see a pretty low valuation of 21 times earnings and about 21 times free cash flows as well. They are quite strongly free cash flow positive. And the company is now paying pretty nice dividend yield of 3.2%. When we look at sales for the company, they were up still year over year. Sure, this is below inflation, so you could argue that their sales are actually down. However, what we need to keep in mind is that Mondelez has a lot of things that they're trying to battle right now. For one, if you look at their 10K, they have this disclaimer that says we are subject to currency exchange rate fluctuations. So as you might be aware, the US dollar is incredibly strong right now, which means that other currencies around the world are weaker by comparison. So Mondelez says that they sold products in 150 countries and had operations in 80 countries. So Mondelez is a global international business. So as the US dollar becomes stronger and as these other global currencies become weaker, that really affects Mondelez's underlying business. Now, this doesn't mean that it's a bad company. It just means that it's something they're going to have to battle through. But what matters most to me is how Mondelez is performing as a business. In their most recent earnings report, they expect 2024 free cash flow of $3.5 billion. So with an $80 billion market cap, that leaves them a price to free cash flow of just 23. Now, this isn't ridiculously low, but it's on the lower side. And it's not just a low valuation that I like about Mondelez. Mondelez is really good about returning capital to shareholders. So in the first 3 quarters of the year, they returned about $3 billion to shareholders in dividends and share repurchases. So do you see what I'm getting at here? Mondelez is expecting free cash flow of $3.5 billion, and they gave back $3 billion to shareholders. Basically, if you are investing in Mondelez, you're getting pretty much all of that free cash flow in the form of share repurchases and dividends. So what you have to understand is that this is a food company. It's not an exciting tech company. So if you're a tech investor, you might say, why are they giving all that money back to shareholders? Shouldn't they be investing in growth? Well, Mondelez is not really a fast growing company. When you sell snack food, you're not going to get these insane returns. The best way that you can grow is by acquisitions or by buying back your own shares so that your per share metrics look better. So anyway, that was a bit of a tangent about Mondelez, but essentially I think this company is looking cheaper and cheaper as time goes on. When President-elect Donald Trump won the US election, we saw Mondelez down quite significantly. And at first I was confused by that, but then I understood it's because they do a lot of business internationally, and a strong US dollar is not necessarily the best thing for Mondelez. However, a lot of these risks are already baked in, as we can see with this rapid slide in share price. So I don't think Mondelez investors have anything to worry about long term. And if you are a long-term investor such as myself, I think that these low valuations present a nice opportunity for a stock that probably won't give you too much volatility. I think this is a company that you can invest in and not really have to worry about their future. Sure, they won't be growing like mad or anything, but I don't think Mondelez is going away anytime soon. So those are my 5 stocks that I'll be watching and potentially buying in 2025. We have TransMedics, Coherent, Qualcomm, Adobe, and Mondelez. If you guys have any other stocks that you'd like me to cover, please leave them in the comments below. And if you're new, please subscribe. It really helps out the channel for the almighty YouTube algorithm. Thank you guys so much for watching, and I hope you have an amazing day.